parents may sometimes be surprised at the often expensive prices of young drivers' car insurance. However, they can reduce the cost of their children's vehicle cover by purchasing a named driver policy. Providing a parent is registered as the main driver and their children use the same car less than they do, this method is completely legal. However, according to research from MoneySupermarket.com, around 14% of parents have named themselves as the main driver on a shared car insurance policy, when their child actually uses the vehicle more than they do. This practice is illegal and known as fronting. Worryingly, 15% of drivers may consider fronting to reduce car insurance costs, while a further 13% said they would front on vehicle cover. The research also showed some motorists were confused over the legitimacy of fronting. Around 25% of drivers believed it to be lawful, whereas a third were unsure about its legality. Peter Harrison, from MoneySupermarket.com, said ignorance may be bliss for motorists who thought fronting was a legitimate way to reduce the cost of motoring. He said, in reality it's quite the opposite. Fronting on a car insurance policy is illegal, and it is worrying how many motorists are willing to take this risk. Despite the obvious attraction of cutting costs on your car insurance policy, there will be serious repercussions if you are caught falsely claiming to be the main driver of the vehicle. Fronting is classed as insurance fraud and may invalidate the offender's policy. The younger driver may also be charged for driving without adequate vehicle cover. Furthermore, anyone who has committed insurance fraud in the past will find it much harder to receive cover in the future. Although the cost of young drivers' car insurance can sometimes be very expensive, there are better, and more legal, ways to reduce the price of vehicle cover. Car insurance for young drivers is traditionally more expensive than other policies because motorists aged between 17 and 24 are often considered high risk by insurers. Sadly, the statistics are not in favor of this age group. According to the Association of British Insurers, ABI, around 20% of young drivers have experienced a traffic accident, while 18 young motorists or their passengers die or suffer serious injuries every day on the roads. Due to their increased accident risk, car insurance premiums for 17 to 20-year-olds are, on average, £2,590 a year. Potentially, the cost of cover alone may prevent many young motorists from driving. However, drivers looking for cheaper vehicle cover may want to investigate telematics. When a customer purchases telematics car insurance, the insurer will fit a small device, sometimes known as a black or clear box, to their vehicle. When activated, this gadget will monitor the policyholder's driving habits. Although this may seem invasive, providing a motorist drives safely and responsibly, their car insurance premium may be cheaper when they come to renew their policy. As well as using this data to help set the price of an applicant's policy, telematics policyholders usually have access to this information. Some insurers may also provide their customers with hints, tips and advice to help them become better, safer motorists. However, if a person frequently drives dangerously or during busy periods, telematics insurance may not be right for them. Instead of helping to reduce the cost of their policy, their premium may actually increase at renewal. Although it may be tempting to front on vehicle cover, parents must never commit this offense. As well as potentially reducing car insurance costs, telematics may also help younger drivers become safer, more responsible motorists. Furthermore, in the event the worst should happen and a policyholder is involved in a traffic accident, their telematics box will act like a GPS device and emergency services can be notified of the whereabouts of the vehicle if necessary. Share this video and subscribe for more interesting auto insurance tips.